Ever wondered how some people seem to effortlessly grow their money in the stock market even when individual companies are up and down? What if I told you there's one single investment that lets you own a tiny piece of America's 500 biggest companies all at once? Stay tuned because today we're unlocking the secret weapon of smart investors, the S&P 500. So what exactly is the S&P 500? In simple terms, it's a stock market index. Think of it like a report card for the 500 largest publicly traded companies in the United States. When you hear the market is up or the market is down, often they're talking about the S&P 500. It's one of the best gauges for the overall health of the US economy and stock market as a whole. This isn't some newfangled idea. The concept of tracking a broad market index goes back decades. In 1923, Standard Statistics Company, which later merged with Poor's Publishing, introduced its first stock index. But the S&P 500 as we know it today officially launched in 1957. The goal was to create a more robust and representative measure of the US stock market beyond just the Dow Jones Industrial Average, which only tracked 30 companies. They wanted to capture the broader economic picture, and 500 companies certainly do that. So how do these 500 companies get chosen? It's not random. A committee at S&P Dow Jones Indexes selects them based on several criteria. Number 1, US company. They must be based in the United States. Number 2, market capitalization. They need to be large with a minimum market cap of around 14.5 billion. Number 3, liquidity. Their stock must be actively traded. Number 4, profitability. They generally need to have positive earnings in the most recent quarter and over the past 4 quarters. Now there's a crucial point. The S&P 500 is market cap weighted. This means that companies with a larger total market value, like Apple or Microsoft, have a greater impact on the index's performance than smaller companies within the 500. It's not an equal playing field, which makes sense. Bigger companies usually represent a larger chunk of the economy. You can't directly buy the S&P 500 itself. It's just an index, a list. But you can invest in funds that track the S&P 500. The two main ways are exchange-traded funds, ETFs. These are like baskets of all 500 stocks, and they trade just like a regular stock on an exchange. Popular examples include SPY, VOO, and IVV. They offer diversification, low fees, and you can buy and sell them throughout the day. There's also mutual funds, similar to ETFs but generally traded once a day after the market closes. Many offer S&P 500 index funds with low fees. By investing in an S&P 500 ETF or mutual fund, you instantly own a tiny piece of all 500 companies, giving you incredible diversification with just one purchase. Alright, the moment you've been waiting for. How has the S&P 500 actually performed? Historically, the average annual return of the S&P 500 has been around 10 to 12% per year over the long term. Now, that's an average. There have been years it's been up 20 to 30% and years it's been down. But the power isn't in any single year. It's in the long-term consistency and the magic of compounding. Imagine earning 10% on your money and then the next year you earn 10% on your original money plus the earnings you made in the first year. Over the decades, this can lead to a substantial wealth creation. It's why so many financial advisors recommend the S&P 500 as a core part of a long-term investment strategy. So why should a young investor like you consider the S&P 500? Number 1 is diversification. Instead of putting all your eggs in one company's basket, you're spread across 500. If one company struggles, it won't sink your entire investment. Number 2 is simplicity. It's a set it and forget it kind of investment for the long term. You don't need to research individual stocks constantly. Number 3 is low cost. S&P 500 index funds and ETFs typically have very low expense ratios, meaning more of your money stays invested. Number 4 is exposure to the US economy. You're investing in the growth and innovation of America's largest and most successful companies. The S&P 500 isn't just an index, it's a powerful tool for building wealth over time. It offers a simple, diversified, and historically rewarding way to participate in the stock market. So what are your thoughts in the S&P 500? Have you invested in it? Are you interested? Let me know in the comments below. And don't forget to like this video and subscribe to the Young Investors Guide. We're here to help you win with money. Thanks for watching and see you guys.